Can someone hear me?
Yes, we
Okay,
can hear
like I
you.
said, we'll make the video available so also on YouTube. So you can also go to our YouTube channel and watch it after this time. And I would also like to
Okay.
mute all of us so that to reduce the noise. And anytime I will want to take questions, I will unmute everyone. Then you can ask me question. Then also, if you want to ask a question, you can as well raise your hand. I'll be able to answer your question. I hope that will be fine.
Yeah,
Okay.
Yes.
fine.
Okay. So this class is basically for those of us who want to understand trading. It's not actually for advanced analysis or professional trading system or strategies class. No. So you just want to make it very short and simple in a way you can understand it better and be able to know how to start trading and how you can come on board. So at the end of the class, you also have access to about $50 educational bonus for those that are connected and you may want to start trading. So you can send a mail to support at the cci@traders.com and indicate your account number that you are part of the class this morning. So you'll be able to receive $50 into your trading account to start trading real fund. So if that's a condition, I think it will be communicated to you by the broker in the email. So it is educational bonus for beginners. So you have access to it. So let me also share the website with you. This is the company official website. You can as well visit their website, cci@traders.com, and in case you have not gotten a live account yet, when you log in on your cabinet, you'll be able to have a live account and follow other instruction there. Also, now let me quickly go back to the presentation this morning about trading. Yes. So let's first start from what is forex trading. Of course, you will learn about forex trading, understand how it works, and also know if there's any risk attached to it, and if you can make money trading forex, and every other thing that you may need to know, which you can ask question about forex trading. So most people don't really understand the concept of forex. It is simply trading on currency trading. That is forex trading. So trading on a global market, trading one currency against another, that is forex trading. For example, if you have traveled to many country, I believe when you get to their border or their airport, you usually find a currency exchanger and exchange the money you have into your wallet to be able to use your money in that country. So that is part of forex trading. But the forex type we are talking here is not borrow the change or exchange money in a boot camp or at the airport or by the roadside. No, it is basically trading on a financial market, a global financial market, by yourself in your phone, which I believe I will be able to explain to you how it works. Now, the foreign exchange market is also known as Forex. It is the world's largest financial market. More than 5 trillion are traded on the exchange every day. That is 25 times the volume of global equities. Now, the majority of the world currencies is traded through this huge, highly decentralized market. I will come to explain to you how it is decentralized and why. The forex market has several trading centers but the main ones are located in Tokyo, London, and New York. Now, when they say the main one are located, it means Forex banks. The big Forex banks are located in all these countries. This allows the markets to operate 24/7, 24 hours per day. For example, we have different time zones in different countries. So currently now we are in European zone. This morning we are connected to European market. By 1 p.m. today, it will shift to London market, New York market, and in the midnight, it will shift to Tokyo, that Asian market. So that is why the market operates 24 hours a day and 5 days a week. Now, currencies on the forex market are represented by 3 letters abbreviation, such as USD, that is for dollar, euro, that is EUR, that is for euro, the JPY, that is for Japanese yen. Then transactions are quoted in pairs, such as euro versus dollar. That's why I told you current forex trading is not like Guru the Change where you have to do it offline. So if you want to trade on forex, you have to you trade the currencies in pairs. The currencies are quoted in pairs, and also you don't need to look for a buyer or a seller before you can trade. So you are basically trading on the financial market through the interbank channels and using your phone. Now, let's just take note of this, that the US dollar is involved in just about every major currency pair, because the US dollar is the country's reserve, the world reserve currency. Now, someone may ask how, maybe thinking in his mind whether he can use his local currency to trade forex. Basically, the most popular currency used in trading forex against the other ones is United States dollar. Now, let me just explain to you more about how it works. Look at this diagram. You could see the people who place in forex market. You could see that you have the large companies and institutional investors. You have the foreign exchange brokers. You have the online trading. It's called electronic forex. That is the one we are now. We have major banks who play in the market. We also have local banks. We have customers, small corporation and institution. Then we have stock brokers, and all of them trade either online forex or they trade in derivative market. That is currency trading for you. So they trade in derivative using an online system. Now, look at the second diagram. You could see that we have different markets in the world. Some of us are familiar with the stock market or equity market or bond or different markets, that is different capital market. But compared to all of them, forex trading is still the biggest market in the world. Now, you can see from this diagram that it has about $5.0 trillion daily trading volume. Now, the second biggest market so far is New York Stock Exchange, which has about $22.4 billion. The third biggest market in the world is Tokyo, that has about 18.9 billion, and London has about 7.2 billion. This is according to Baby Pips. This information was gotten by Baby Pips. Now, this is daily trading volume. Then you can see that forex market is over 200 times bigger. It is huge. It's over 200 times bigger compared to average trading volume of New York market. Now, on a daily basis, the retail traders makes up to 5 to 6% of overall volume, or between 300 to 400 billion. You and I trade every day about 300 to 400 billion daily, because I believe all of us could be retail traders. So we are not these people. We are not maybe larger. We may not some of us may not be larger banks and institutional investors. we may not be in major banks or local banks. Some of us may not be stockbrokers. So I believe some of us may be may come under retail traders. So the retail traders has a trading volume of about 5 to 6%, which can give overall amount of trade $300 to $400 billion daily. You and I trade. Then it means that people are making money. For this amount of money to be the trading volume per day, human beings are the one playing in the market. It is money that is being transacted, traded every day, every minute, every hour. So you too can also be a part of the system and make as much as you can, but you just have to learn. You just have to understand how it works. Now, look at the second diagram too. You can also see how forex trading is done on a global scale. So it is done through EBS and router. That is, EBS means electronic broker services. Because when you want to, as I said earlier, if you want to trade forex, you're not going to look for who you buy currency from or sell currency. It's not through the change. So you trade the global market through electronic system, which is called EBS. Through electronic brokers, it could be like a cloud system. That is why it is decentralized. So it is connected to different areas. So you may not go in any place and see people who are trading forex in a group. No. Now you can see how financial institutions are connected. Prime brokers are connected. You see how banks are connected. Then you can also see how online forex market is also connected. You and I, who are individual traders, how all of us is connected through this channel. This is cloud channel. So it's decentralized because there are different banks, different institutions across the globe. So through the help of technology, all of these things could be connected. So it can be in any part of the world where you are. You'll be able to connect to watch any currency movement from any market in the world, any market zone. It could be Asian market, it could be US market, it could be New York, it could be London, including African market. You can be able to be anywhere in your world and know the value of all these currencies. And as economic activities are going on, you can see there are changes. They'll be changing every minute, every hour, based on the economic strength or economic activities of that particular currencies. So now, then you see that some people who cause the major moves in the market are financial institutions, banks, prime brokerage, and you and I, who are probably retail traders, that's individual traders. Now, who is a forex trader? Who can trade forex, or who's actually, when you say I'm a forex trader? A currency trader, also known as a foreign exchange trader or a forex trader, then it's a person who buy and sell currencies on foreign exchange. Then currency traders include professionals employed to trade for financial institutions or firm or a group or a client. So it could be those of us who are portfolio managers, big fund managers, are also known as forex traders. But they also include amateur traders who trade for their own financial gain, either as a hobby or to make a living. So you too can also trade forex, apart from professionals who are employed to trade for banks, who are employed to trade for big brokerage firm and big financial institutions. So you too can also be a trader. You can trade for yourself, for your financial gain, or you can equally make it a lifestyle to make a living, because a lot of people are making money trading forex. And the advantage of forex trading is that you don't have to look for who you buy to or sell to. You play in the same global market, and you make your money. And you don't have to open an office or have a big capital. It can just be in your house. Use your device like or your phone or your laptop and connect it to internet, and be able to participate in the global market. Then someone may ask, how much profit can I make? Is this real? So how do I come on board? How much profit can I make in trading forex? So let me explain to you further how it is done. Then you can see, look at how forex platform looks. Assuming you are using mobile version, or if you're going to use mobile version, this is how it looks. You can see euro and dollar, it is close together. You can see that there's nobody to buy to buy from, or nobody to sell from. So all the financial market has already been well organized, and the currencies are quoted in pairs against another. So as the economic of the world is happening, and you could see the reaction of those currency pairs, their prices, either when either the prices is rising or the prices is falling, and you make profit from the rising and falling of all the prices. Then you can also see here how you can see a balance, how everything is paid. You see euro versus dollar, Britain pound versus dollar, dollar versus chef, US versus Japanese. So you don't have to look for who you buy from or who you sell to. It's not a black market. And you can also see the reaction. Maybe there's a buy position here. You see that there's a profit so far. You can also see another buy position here. There's also a profit. You also see a sell position. There's also a profit. You could also have maybe a loss. Now, let me explain further to you about this thing. Your trading performance, when it comes to profit, there are things that can determine how much you can make in the market. One is your trading performance, your capital, and your risk measure. This trade plays a major role on the kind of profit you make when you're trading online. Your trading performance, that's why you have to learn. You have to learn how to trade. You have to understand a little about. That's why you have to learn how to trade. You have to understand a little about the market. Then your capital, the amount of money you are using to trade, and your risk measure determines plays a major role on how much profit you can make. Now, for example, let's say you traded like 10 times a day or 10 times a week, and 6 out of your 10 positions were gained. I mean, you gained 10 positions of your market, of your trade, and maybe probably lose 4 positions. So that means your percentage win rate is about 6 divided by 10, which is about 60%. So it means that you have gained about 60% of your trade, maybe in a week or in a month. Then if your trades brought you about $3,000 profit, then your average gaining or winning rate will be about $3,000 divided by 6, which is possible that out of the 6 trade that you gain, you have a maybe average winning or average profit of $500 per trade. Then if your losses were only $1,600, then it means that you have average of $400 loss. So now the good traders can make about 80% of their can have 80% profit gain of their total trade. They can also have 60% gaining of their total trade. Some can have about 90% gain of their total trade. But beginners who doesn't really understand much how to trade, maybe having a low percentage gain, they may have about 10 trade, maybe probably gain maybe 2 out of their trade and lose 8. So that is a poor strategy. So making money in the forex market has to do with understanding the business and your capital control and your risk measure. Now, someone may ask more, what is, are there risk in trading? Sure, there is risk. There's a risk in trading. Trading has a risk. So it is not a risk-free. That's why you have to learn how to trade. You can make profit and you can as well make losses. So we just want a good trader will look for a strategy that can help him earn more. There's no business in this world that is risk-free. I've not seen any business you can do in this world that does not have a risk. There must be a risk attached to every business. So you just have to learn. As I've seen that currency trading is all about buying and selling a currency online. It means when you buy a currency and the price drop, you'll be having losses until the price appreciates. That's when you're gonna make profit. So now it has to do with you understanding the business and able to maximize your profit potential than losses. Then how difficult is Forex? People may always say that they don't have time to trade Forex, that Forex is difficult, blah blah blah. So it's not something that can be easy. Now the answer is Forex trading is hard in the measure of your commitment, dedication, patience, and persistence. So more you work with dedication for the long time, less hard Forex trading becomes. Now, the more you insist and persist, the more money you earn, and you've been proven. That's the truth. So the more you educate yourself about the business, understand it better, the less risky the Forex trading becomes for you, and you have more high or more chance of making more profit, because of life is a risk, and it is more risky when you doesn't know anything about what you're doing. Probably you are a driver, or you want to drive a car, and you didn't learn how to drive, you don't understand much about driving. I enter into the steering and began to drive. So you are taking a very much risky than someone who is a professional driver who is also driving on the same road with you. That is how it is. So trading is not difficult for those of us who have learned a lot how to trade, and could be difficult for you if you have not known anything about trading. So your commitment, dedication, patience, and persistence will play a major role in you becoming a successful Forex trader. Now, someone may be also asked, what are the currencies that may be traded? I have a question here. Somebody saying in chat. Let me read the chat. Do I have to call or enable volume? You check your phone. Your phone can, you can check your phone. Check your phone. Check your phone. Check your phone. These are the major currencies that has higher volatility in the market. When you want to trade Forex, you could trade Euro, Britain Pound, Australian USD, New Zealand USD, US dollar, Canadian dollar, Swiss francs, JPY. These are 8 major currencies that is driving the market. I think I will also say 8 major currencies that has a serious impact on major volatilities in the market. You could see Eurozone. Eurozone has a lot of countries under Euro. Britain Pound is also a very strong economy. Australia, New Zealand, US dollar, the world-based currency, and the Canadian, all these things, the Asian market, the Asian currencies. These are 8 major currencies that plays a very huge role in Forex market. So when I open the chart, you can see that all these currency pairs has more volatility in the market than every other instrument. Now, let's go further and understanding the market. I'm going a little technical now. When you want to trade Forex, you will see something like this. If you must have downloaded a Forex trading platform, you will see something like this, euro and dollar. You could see something like this. You could see something like this. Now, that is why I told you that currencies are traded in pairs. So you could see their buying price. You could see the selling price of euro. Now, when you place sell, or when you want to sell, when you place sell on this kind of currency pairs, it means that you are selling euro and buying US dollar. When you place sell, it means that you are selling euro and you are buying US dollar. Then when you place buy here, it means that you are buying euro and you are selling US dollar. Let me say that again. When you see a currency pair like this, for example, euro and dollar, so euro is the base, dollar is the put here. Then you place a sell, it means that you are selling euro and you are buying US dollar. Then when you place a buy on their base, it means that you are buying euro and you are selling US dollars. This is the simple explanation of how it works. So it's not a business where you look for who you buy from and you will sell. Then assuming you place a buy at 1.3065, and the price of this currency pairs started moving up, maybe 1.3066, 1.3067, 1.3068, and keep moving, then you'll be making profit because you place a buy on the currency pair. Then assuming you place a sell at 1.3064, and the sell drop at the market, the market value, the market price drop from 1.3064 to 1.3063, 1.3062, 1.3061, 1.3059. You see that the price is dropping, then you'll be making profit because you are selling euro and you are buying US dollar. Currencies are traded in pairs. Just take note of that. They're not traded between human being and human being. No, they're traded in pairs. Now, let me also explain some technicalities here. Now, you can see here, you see that the price is the price quote of this euro US now could be is 1.1352, 1.1353. So it could be decimal point. For example, now you could see a volume here. This is a trading volume or a trading spread. Because of if you check between the buying price and the selling price, you could see 0.06. That is a spread. What the price that you have to buy and the price that you have to sell. So the difference between your selling price and the buying price is called spread. Now, that's what we call PIP. 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 For example, this is 1.13528. Now this is 1.13534. Now, if this currency pairs move from 1.13529, it is a PIP. If this one also move from 1.53, maybe 1.13535 or 533, it is also a PIP. Now, let me also explain further. When you remove the decimal formation of currency pairs, and you want to buy euro and dollar in the let's say parallel market, it means that to buy 1 euro, you need $1.13 to buy euro. But for margin trading, it has to add. You have to have more pips movement to give you 1.14, assuming the price of dollar is rising. So now on electronic value, you'll be able to see all the movement in that currency that will give rise to another value till when the price moves from 1.13 to a higher value, then it will come up to be maybe 2 points. Then it means that you have to use $2.13 to buy 1 euro. I think you may probably understand this when I open the chart completely for you. Now, let me show you what I was explaining. Now, let me show some screen with you. Now, this is the chart. This is Forex trading chart. This is a live market. You could see your balance here, where you have the balance you're trading. You could see if you have a demo or a live account, it will be here. If it's a demo account, it will show real or demo here. Now, these are currency pairs. For example, this is Euro USD. This is the current market so far. Let me make it more clear for you. Euro dollar. Now, this is the selling price. This is the buying price of euro. It means if I want to buy euro, if I want to trade on euro US at this time, if I want to buy, I'm buying at this current price. I don't have any right to decide the price, whether the price maybe to change the price. You can't change the price in the forex market. So the market is open, is very transparent. So you can't change the price in the forex market. The market is open, is very transparent. So if I want to sell, it means I'm selling at this price. Now this is 60, this is 64. So the difference between 60 and 64 is the spread. And now this is the current value of euro and dollar in the international market. It means if I want to buy, I'm buying euro, I will need $1.08 to buy 1 euro. But on electronic value, I will just have to go here and place a buy. So it is giving me the information that to buy euro, look at the value or the international value of dollar to euro. Now here now is where you see the trading volume, how much you can make per movement. So when I place a buy here, each movement in the market gives me profit based on the volume I have and based on the volume I'm trading. Assuming I have $1 million, I'm buying at this price. So if I have $100, I'm buying at this price. So everybody plays in the market according to their capital, but on the same price. Now, assuming I have 1,000, I want to trade a very big lot size, a trade that can give me about, assuming I want to place a trade with a 3.0 volume, and someone else is placing a trade with a 0.5 volume. But we are all going to trade on the same price, but we are not going to make the same profit. Now, I may choose to buy at this volume. Someone else may choose to buy at this volume. So, but on the same price, we are the person who place a buy with a higher volume will be making more profit than me that place a buy with a small volume. And this volume here is called lot size, the lot size. That is what determines how much you can earn in the market. It also determines your risk. Then you can also see that in forex market, there's a stop loss. You can have a stop loss order. Assuming you have a wrong trade, the trade that is maybe not going where you're probably having a losing trade, you can place a stop loss order, put in a price that probably you don't want to lose more, or you want your trade to close at a particular point. I could see, okay, let me have a stop loss at 1.03118. Then I will buy the currency. Then when I buy the currency, I've already placed my stop order at 1.08118. So it means if the market eventually goes bad, if the market eventually goes bad for me, I will have I won't lose all my money. Then I can as well have a take profit price where I can choose a profit a price to put my take profit, which probably should be higher from my buying point. Assuming I'm buying at 1.08401, I may choose to put my take profit at 1.008780, then which will give me about $180 profit. Then I can choose to place the order, buy. Then my order will be placed. So these are parameters that helps traders to regulate their profit and also regulate their losses. So the forex market is not as risk as you may think. You just have to learn and understand how some things work. So you can take 1% risk, you can take 2% risk, it can take 10% risk, it can take 20% risk, it can as well take 50% risk based on your risk measure. So as a beginner, you may start trading Forex with a small amount of money and see how you can easily grow. For example, I'm having a trade volume here. I have a trade that is on here. It's about, I'm getting about $1,500 profit. Yeah. It's a position here. I have a sell order, probably a sell order here on oil. I have a sell order on oil, which I'm gaining about $1,400 profit. So if I'm losing money, it will be on negative. It will be on negative. So because I'm gaining, that is why it's on positive. Now let me open up and answer some questions. If you have any question, you can ask me now. If you have a question, I'm open. I can answer your question. Any questions so far? Okay. Yes, I can answer your question now.
Yes, yes.
Any question? I'm open. I can answer your question now. You raise your hand. Yes, Julius, you raise your hand, then you can ask a question. Yes, let me ask a question, Julius. Julius, I'm with you. You can ask a question. Yes, ask a question. Okay, Julius is not answering. Sandy for Forex.
Hello. Sorry, it is network that is disturbing.
Okay, I can hear you now.
Yes, sir. And thank you so much, my boss, for this good enlightenment and good lecture this morning. Hello.
I can hear you, sir. Go ahead.
Yes, sir. Please, sir. This Forex of a stop, sir. The way you have lectured it, as if somebody is giving somebody's free money. But my question now goes down, sir. If you have like $50 in your account, and you said Europe, the currency code, which is Euro versus US dollar.
Yes.
If you place buy, that is you are selling, you are buying euro.
Yes.
Yes, and as I can see that the first currency is euro, and the second one is USD. So
yes,
I want to know how come that kind of thing is happening, because somebody is not reading a lot of text on this stuff, but doesn't understand the issue. Then the second question is, for how long can you leave that trade to be on the platform, and so that you will not be able to lose your money when it's going to a positive? Then the third aspect, sir, is in those 8 pairs, are they the market opening at the same time for somebody can access the market, sir?
Okay. Your first question is concerning euro at the right and the dollar at the left. I think
yes,
so.
Sir.
Let me try to answer the question. This is the settings, the standard settings, or the standard code. How they have all been set, all the currency pairs. Now, as you can see from this chart here, you can see this chart here. that you will see green and you will see red.
Yes.
Yes. Now, it means
Yes.
that it's either one currency is rising and or another one is falling. Now, let me explain to you.
Yes.
When the value of euro and dollar is going up, it means that euro is gaining strength because euro is the base.
Okay.
Yes. Now, dollar here is a counter. As the name sounds, counter. Dollar counters dollar. Sorry, dollar counters euro. So now it means that this price you see here is a value of dollar for euro. So when you place a buy, for example, and the price is appreciating, it is simply communicating to you that euro is gaining strength against dollar. So now, if you want to get dollar, you may have to pay more money to get dollar. Sorry, if you want to get euro, you have to pay more dollar to get euro.
Okay.
Are you with me? Now, when the market is dropping, because dollar is a counter currency, when the market is dropping, it means that dollar is gaining strength against euro. So now, if you want to get euro, so you have to pay lesser dollar to get euro. For example, now you have to pay about 1.08 cents to get 1 euro. Now, now imagine the market coming down. Let me check a daily a monthly chart so that you could see more price. Now, okay, for example, imagine this chart moving up to 1.4. I mean, moving up to 1.4. Now it means that for you to get 1 euro, you have to pay $1.46 to get 1 euro, assuming the market has gone up to this point. Now, currently, now the market is very low. You have to pay 1.08. Now, answer me 1.08 and 1.46. Which one is higher and which one is lower?
1.46 is higher.
Yes. So now that's why I told you dollar is a counter. So now it means that dollar is dominating. Dollar is gaining strength against euro because I don't need much dollar now to get euro. It's almost the same amount with euro now because it's 1.08 for me to get 1 euro. But assuming the price goes up to 1.4, it means I have to pay more, maybe 1.40 to get 1 euro instead of paying 1.08 to get 1 euro. Now, so it means what I want to make you to understand is that when the price of this currency pair is going up, it means that euro is gaining strength against dollar. Then, when their price is dropping, it means that dollar is gaining strength against euro. So now when you place a sell, and the market is dropping, you are gaining. Dollar is gaining, and you'll be gaining because of you are selling euro to buy dollar. Did you get my explanation?
Yes, I do. Very well.
Okay, now let me explain your second question concerning how do you know when to leave the market and when to remain in the market. Now, when the market is 245 on internet, as you saw from the beginning, the trading volume over $1 trillion trading volume. So there's always opportunity. There's always opportunity in the market. There's always movement in the market. So now you as a trader will come up with a trading plan, which is not the topic of this class. Maybe the next class, when you have come on board to learn how to trade, you will have to take another course on trading plan. You have to come up with a trading plan on how much money you may want to be making per day or per weeks. So you may come with a trading plan of gaining maybe $10 every day. So it means in a month you have an average profit of $300. But it's also going to be based on your capital. For example, this is the capital I'm trading. I have about $62,000 here. So I'm making more money. So if someone have about $62 or $100, the person is not going to make this kind of money I'm making. So now this trade now have been on for a while. So I may choose to trade a day, become a day trader. I may choose to trade per week. I may choose to trade for a long time. So the question on when to exist is not something that can just be answered direct. It is based on individual trading plan. You can have a trading plan of taking it small, or like taking $10 every day, for $5 every day, $2 every day. So that becomes your style and your strategy. So for me, I want a trading plan that I can be taking $200 every day. So it will become my lifestyle. So I will try to make sure I develop the strategy to be strong. So I will be making more money than the one I'm losing. You asked the third question. The third question is, what was the third question?
And my third question is the eight basic currency. Are they opening the same day, the same time?
Okay, yes. Now, yes, the market is interconnected. For example, now we are trading on euro. You could say that the European market probably has more volatility now. So it's all interconnected. So towards even towards even or in the night, euro and dollar may have less volatility. While Australian dollar or JPY, this is JPY, JPY Australia, which is Asian market, may peak in volatility, may have more volatility. So that is why it is all interrelated or interconnected. The overlaps. So when this market is closing, the other one is opening. Are you with me? When this market is opening,
yes,
the other session is closing. So that doesn't mean when session close that it can't execute a trade. It means when session close, volatility will cease or will drop. So it's not going to be more volatile than the trading than the daytime. So the time zone overlaps. By 1 p.m., we move to New York session, and the market of the New York market will react. By midnight, we connect to Asian market. In the next morning, we connect to Euro market. So they all overlaps. It continues until 5 days every week. I think I've answered your question.
Okay.
Yes.
Yes, sir. Sir, please don't be offended. I really appreciate what you are doing this morning, sir. The broker also are they have any impact in trading on a particular platform? Because when you enter when you want to do that kind of thing, you are missing a lot of maybe you cannot be the market is closed, or the order is not accepted or invalid, all those things.
No.
Are they monitoring what you are doing?
No, that is lie. So if you place a trade and you said you see something like invalid price, it means that your network is not strong. One. So yes. Let me tell you something. No one has capacity to change the movement in the forex market. For example, if forex market, yes, if dollar is rising, it will be rising globally. Everyone will be saying that dollar is rising. So if dollar is falling, it will be falling. For example, oil market is falling. This is oil. Oil is now $24 per barrel. That is the price everywhere. So there's nothing somebody will say about it. Broker cannot change it. Now, look at what broker can do. Broker can give you a selling price, which is 24.03, as you can see here, and the buying price, which is 24.09. Can you see the difference? So broker is telling you if you want to buy, you are going to buy at 24.09. Why you want to sell, you sell at 24.01. So the difference between this buy and this selling becomes his commission.
Okay.
Yes, that is what broker can do. The difference between your selling price and your buying price become his commission. For example, this is Euro USD now. If you want to sell Euro USD, you sell at 0.490 for sale. And if you want to buy, you buy 493. As you can see, the price are not the same. So that is how the difference between this buying price and selling price becomes your broker's commission. So broker does not have, nobody has ultimate decision, ultimate control in the market. It's not possible. It's not a black market. no one has ultimate decision and ultimate control in the market. Yes.
Thank you so much, sir.
I think let me answer another person. Let me answer Sandy for Christ. Sandy for Christ. Let me answer your question, sir.
Sorry. Good morning, Mr. Uche.
Morning.
It's a lady here, please.
Okay.
So
I'm with you.
I want to know. I've traded Forex before and I lost. But my question is, can one really? I want to restart. Can one really restart with a $50, capital? Start because I want to be on the safer side. Do you really understand what I'm asking?
No. I didn't get you. It was breaking.
Okay, can one start trading with a $50 capital?
Yes.
All right.
So for me, all this amount is a learning amount. So you can start with small amount because it's not advisable to start trading with big amount when you have not really understand the market very well. So you can start with $50, $100, but take note, it should be taken. That money shouldn't be money that will make you rich. It should be money that you'll be using to learn and understand the market, building your emotion and psychology. Are you with me? Are you with me?
Yes, I'm with you, sir.
So when you have a $50 capital, you could be having a position of, for example, a position of, let me give you an example here. For my chart here, you could have a position of maybe 0. Let's say 0.01, 0.8. I mean on currencies, which can be given like 8 cents per movement, 6 cents per movement, small, and you can use such strategy to learn. So, but it's not gonna be like where you have $50 and you want to make $100 in a day. So probably you'll be taking a very high risk.
Okay.
Yes,
Okay, I
but the
understand.
most important thing in this business is learning and understanding it. Learning, knowing how to place a trade, how to take a profit, or how to make market, how to get a market analysis, and we also have a channel group, like a signal group where you can connect and you can receive daily signal that can enable you trade. Like I personally started trading with $200 or so. That was what I started trading with. But with time, I was able to grow because I had losses, I had profit, I keep learning until I was able to understand that having enough equity and enough balance is one of the secrets of the business. But I won't advise you to start trading with big money if you have not learned it very well. You start trading with small first until when you have known a lot, then you can now put big money.
Okay, sir. Thank you very much. That was helpful.
Okay. So let me answer another person here. Let me answer Hosanna Otika. Let me answer your question. Hosanna, hello, Hosanna, are you there?
I can hear you. I wanted to ask, how much is required to start trading on Forex?
$10 can trade on Forex, $50 can trade, $100 can trade. It is the similar question that Sonny for Christ asked me now. So you can trade with any amount of money. As a beginner, you have to start small, or you can start with demo account. Are you with me? You can start with demo account to learn for some time, or you put if you want to start live, you can start with small amount like $50, $100, and trade for some time, and then it will be a learning amount of money for you. When you have learned a lot, then you start. For now, like today is a beginners class, so we have all that class coming up on advanced. Probably when you must have set up an account, have all this platform you can watch over here. Then you can now put small amount. Then we'll have another class on trading analysis, how to understand demand and supply, how to understand support and resistance, how to know when to buy and when to sell, how to understand fundamentals like in use. These are different course outlines that you will be learning as time goes on. So, so with that small amount of money, you'll be learning gradually with it until when you have mastered the trading to some extent, then you can now put big money.
Okay, thanks very much, Agap.
Okay. Chetana, let me answer your question. Chetana, I'm with you
Good
now.
morning.
Let me answer your question.
All right. Good morning.
Morning.
Okay. Please, I want you to throw more light on this spread. Probably how is the technical and how is measured and probably determined. That's the one question I would like to ask. Then the second question I would like to ask is, on this lot size, each of the lot size you are using, how can you use it to determine the amount of profit you are making? Like how each of the lot size per lot size, how much will it give you per profit in US dollars? That's number one. I don't know if you got the question I'm trying to ask. The PIP, each of the PIP you are using based on your lot size, how can you use it in determining the amount of profit at the interval of the PIP movement? I don't know if you get that question.
Yes. I got you clear. Okay.
All right. The other question is on the stop loss and take profit. If you want to set your take profit, like I'm seeing on the group chat, I used to see people setting profit 1, 2, 3, take profit 1, 2, 3, and beyond. I want to know the procedure of how to set it. Does it mean that once the take profit 1 is hit, it won't take you out of the trade, it will continue to go? Or once the take profit 1 is hit, it will take you out of the trade and you have to enter the trade again? That is what I want to understand on this take profit. Because when I see that take profit 1, 2, 3, I try to use try to set, but I don't really get how it is done. Or even once your TP1 is straight, it will take you out of the trade, or it will go, it will continue up, it will hit your TP without you entering another trade. I wish you understand what I'm trying to do.
Just take note now that you personally shouldn't have joined the class, but it's good that you joined, because the question you asked me is not for this class. You are asking of other trading analysis, which is not part of this class. It was just designed for those that have been asking us. They want to understand what is Forex, how does Forex work.
Okay.
I get my point now. So you ask, your question is going towards trading, how one can make trade. But let me try to answer you. Now, when you come on volume, for example, this is trading volume, as you can see.
Yes, sir.
Then, assuming you have 1.00 trading volume, and you're trading a currency, it means any movement here gives you $1. It means any movement here gives you $1 per movement. As you can see, the spread is $4. That is commission. Okay. And now look at 61, 65. That is 4. 61, 65. So that is the difference. Now it means that the spread of this of this currency now is 4 pips. So as soon as you open a trade, you will have minus $4 as commission, because you are using one lot. So, for example, if you are using 0.10 to place a trade, the spread is 41 cents, as you can see. Yes. I'm 0.41, because each movement will give you 10 cents. 10 cents. Each movement will give you 10 cents. Now, for example, now, if you have 10.0, as you can see, the spread will become 41. I mean, the spread commission will become $41. Why? Because each movement will give you $10 per movement. Okay. Are you with me now? Yes. So each movement will give you $10 per movement, and the contract value is about $1 million. Although this is not necessary for you, it's just for information purpose. This one, but now, assuming you have 0.01. Now each movement will give you 1 cent. because of you're using the least denomination in currency value. So each movement give you 1 cent. So let's say you have $50 or let's say you have $50 capital or $100 capital, and you put 0.5. 0.5 will give you 50 cents, 5 cents per movement, 5 cents per movement. So for you to make $1 profit, the market has to go about I think about 10 pips, I think 10 pips movement for you to get $1 profit. Now, but this volume now, assuming you are trading oil, let me go back to oil. Let's say you're trading commodities like gold. Let's say you're trading, okay, this is good. This is good. Let's say you're trading gold. Are you with me?
Yes, sir.
Now, gold, you use 1.0 to trade gold. Now, look at the spread, 47. Because of gold give you 10, okay, the spread is 50. I think from 21 to 65 is 50 pip spread because of gold is a big commodity. Then now 1.0 give you $10 per movement. Understand? 1.0 give you $10 per movement. Why in currency 1.0 give you $1? So now if you put 0.10, you will now have $1 on commodities, 0.10. Why in currency 0.10 gives you 10 cents? Why here it gives you $1? So if you put 1.0, 10, that's 10.0. This is 100 pips per movement. So this is $100 per movement. If you use this 10.0, it gives you $100 per movement, and you must have enough capital to be able to trade with 10.0 volume because of the kind of movement that it will give you. Why in currency 10.0 is $10. Why in commodity 10.0 is $100. Then here is $1 for currency and $10 on commodities. Did you get that?
Yes, sir. I'm getting you. I'm seeing it.
Then assuming, for example, now when you get a signal to buy oil or gold or any commodity, so be careful of the lot size. So if you are doing on 0.1 on currency, which is 10 cents, just know that 0.1 on commodity will give you $1. So if you don't have enough capital to trade $1 per movement, you just have to change the lot size immediately.
Okay.
So this is the mistakes most people are making because they don't understand how it works. For example, 0.5 on gold give you $5, while 0.5 on currency give you 50 cents. Yes, if you come to currency, 0.5 give you 50 cents because of for example, this is 0.5 on currency. It gives you 50 cents per movement, 50 cents. Are you with me?
Yes,
why on gold or commodity they give you $50, $5, sorry, $5. 0.5 give you $5. You asked another question. What was your question? Okay, concerning stop loss. When you want to buy and someone asks you give you a position to buy, a position to sell, where to put stop loss or take profit. It means that, for example, assuming I buy assuming I place a buy on a Euro Britain pound, remember this is the current price now, and I put a stop loss. Can you hear me? I put a stop loss. It means if the market goes to my stop loss, it will whether I am watching the market or not, it will close. Are you with me? then if I put a take profit, it means if the market price get to the price I set my take profit, it will close and keep my profit. While here, it will close and it will close
Yes,
at
sir.
loss. Yes. That is what stop loss and take profit is. For example, let's make it simple for you in a way you understand. Okay, let's use oil commodities for example. Let's say oil WTI. The current price of oil WTI is 19 cents per barrel.
Yes.
And
Yes,
I
sir.
place a buy. You know, if I place a buy at this price, I'm making profit when the price is going up. You know, so. So, for example,
Yes, sir.
if I buy oil at $19.44 and the price is, keep going, I can put my take profit at, for example, at maybe $21 per barrel. That is my take profit. Then I can put my stop loss. If the market goes below $19, I'll probably be having loss. I can put my stop loss at $18 per barrel. Are you with me?
Yes, sir.
Now it means if I buy oil at this price, sorry, it means if I buy oil at this current at $19.48 per barrel, and I set a take profit at $21 per barrel, if the oil price gets to $21, it will close and I will have a profit of $750, $765. Then now, assuming I put it, this could be very high. Let's say I put it at $19. Assuming I set a stop loss, I'm buying at this price, and you know, if the market dropped, I'll be having a negative, and I don't want that negative to continue. I can put a stop loss at this price. So it means if oil price get to $19, it will stop. My trading will stop, but it's going to stop at loss, and I will have a minus of $200. While here I will have a profit of $785 based on the price, based on the price I set my stop loss and the price I set my take profit.
Okay.
That's what take profit and stop loss means.
Okay.
Any other question?
Yes, sir. This take profit, like this one is your first take profit. Can you set another take profit above $21 without going out the trade? So that when you are getting your first take profit, can you set profit in $22, another $23?
No. What you can do is to modify. For example, I have a stop loss here. I have a stop loss at $30 per barrel on this place. It's as a stop loss. But
okay. Yes, sir.
not take profit yet. I didn't take profit because of the market condition. I leave it open. So it means if oil price goes negative to $30 per barrel, my trading will stop. So I can't have stage 1, stage 2, stage 3. No, I can only modify. I can only come here.
Okay.
Maybe I don't want it to be close at $30 per barrel. I can modify to $28, 25, or 31. I can modify, but you can have maybe a multiple take profits on the same trade. No, it's not possible.
Okay. All right. Thank you, sir. That's what I want to understand. Thank you, sir.
Okay. Any other question? Someone asked me another question, please. I want to ask why the buyer button is green and why the sell button is I want to ask why the buy button is green and always that. Yes, because when you buy, someone asked me the question, when you place a buy means if the price of the instrument you are buying is going up, you'll be making a profit. If the price of the instrument you are buying, let me type it down. Instrument you bought goes up, you make a profit. Now, in the real life here, you know, when kind of a red sign or a yellow sign is a sign of danger. So it means if the price of the instrument is going down, so the price will be showing red, indicating that the market is dropping. So if it's going green, it means it is good. The value and the price of that currency is rising. So that is why the buying price is always high and selling price is always low, because buying is something you are buying with a hope that the price will appreciate. And when you sell, you are selling because the price is dropping. Any other question so far? I've spent 1 hour with you. I was expecting to spend 30 minutes with this class, but I think it was so impactful. Let me make a random and conclude the class so that we can go back to trading. For those of us that may want to sign up, you can sign up from this. This is our recommended broker. It's one of the best trading platform you can use to trade. You see, you have a lot of things. So I will come back with another topic on trading analysis and understanding fundamental and technical trading. We'll come back with that, but probably for those of us who already have a live account, this is where you can sign up an account. Then that is a good news for beginners who want to start trading. I have to move to you. That's good news for those of us who want to start trading. Let me go back to the line. Okay, so for those of us who are trading, who want to start trading, so you can, for the sake of this class, you have a educational bonus of $50. So if you want to get the bonus that you participated in this course, you can send their email to support@cci-traders.com and indicate your live account. Then a $50 bonus will be given to you to start your trading. Then if there are other types of conditions will be communicated to you in email if it's gonna make withdrawal of the profits or not. Then for those of us that may want to do demo account, you can as well go to the website and indicate your interest in having a demo account and probably open a demo account. It's an instant process and be able to practice demo for some time. Then if you want to join our signal group, you can join our Telegram channel and get more signals to trade. Okay. That's all about this morning class, and I believe we have learned a lot. This video will be made available on YouTube, so you can go back there and download it and watch it over and over again. I also want to tell you thank you, and make sure you stay safe in this time. Bye-bye.